But it's our 12th consecutive year of paying an RPI progressive dividend. That's 1.3 billion in total that we've paid to our shareholders. And beyond that, and this is the crucial part, we've generated about £1 billion of cash to reinvest in the business. And that supports our second aim of maintaining NAV in real terms. So the proposition is the same.
Hello, you're watching Proactive. Joining me is Greencoat UK Wins, Matt Ridley. Matt, very good to speak with you. You're out with your interim results today. Could you give us an overview, please?
Morning, Stephen. Thanks again for hosting us today. So we published our half-year results this morning with an analyst call at 9 o'clock in the morning. That'll be on our website for people to view if they want a deeper dive. But the story is really one of resilience in terms of dividend cover against some of the lowest wind speeds that we've seen during the first half of this year. Winds was particularly low in the first quarter of the year and not much better in April and May, a bit of a recovery in June. Overall, that left us 14% down on budget, but that still gave us dividend cover of 1.4 times for the half year. So that demonstrates, I think, the resilience of our portfolio. Our NAV was also down, and that was really impacted by lower than budgeted generation and a softening of power prices. The other contributing factor was the mark to market in our swaps. That doesn't make us any richer or poorer. It's just following the accounting treatment. We speak a lot in our results about capital allocation. It's extremely important in the world that we're in today. And we'd said in our last set of results that we would look at disposals to further fund that program. So we were pleased to announce this morning that we've contracted 4 further disposals for a gross asset value of 181 million. That brings the total divestments over the last 8 months to 222 million. They're all sold at our prevailing net asset value, which further reinforces that there's a bit of a disconnect, frankly, between our share price and how private markets value these assets. But we were pleased to get those disposals done, and that will go towards our buyback program, which continues, and also to de-gearing the business.
Matt, the sector's faced some headwinds over the past 12 to 18 months. What have you been doing to address these?
It certainly has, and we haven't been alone in that. I think if you look at rate movements over time, and you look at there being probably a bit too much product in our sector, that's dragged everyone down to a discount. We can really only control what we can control. So we look through the prism that we always look through, which is what actions can we take that are in the best long-term interests of our shareholders. And we and our board are fully aligned on that. Our fees are fully rebased, which is one of the things we've done to market capitalization. So our experience is the shareholders' experience as well. We were also the first to start a material buyback program that's been extended to be 200 million in total. We're about 130 million through that. And we were the first in this sector to recognize that as gilt yields rose, our return needed to adjust. So these are all proactive things that we and the board have done. More recently, we've been focused on capital allocation. We committed to the divestments that I mentioned earlier, and that will support our ongoing buyback program and de-gearing. I think, look, Stephen, the overall point is that we and our board continue to take these actions, the right actions, in the best interest of our shareholders, because we want to improve the company's attractiveness relative to the climate. We know we've got a lot more work to do, but you can see from today's results some of the fruits of the labour we've undertaken so far.
The government recently ruled out zonal pricing. Presumably, this is a positive for UK Wind.
Yeah, look, I think with the review of electricity market arrangements, it's pretty clear that some version of reform is needed. But I think it's also important that it's done in a way that's sympathetic to the need for continued investment in the sector, and not just renewable assets, but also grid and related infrastructure. So we and other generators that own assets already felt that if you introduced a zonal pricing market and you didn't do it in a way that gave the right commitment for existing owners of assets, it could lead to uncertainty in the investment community. And that in turn could have jeopardized the government's goals for Clean Power 2030. So we'll carry on engaging with the government around what's left, which is in effect national market reform. Again, our view will be to ensuring that the outcome is equitable for consumers and existing owners of assets.
More broadly, Matt, is this a supportive policy landscape for renewables?
I think it is, yeah. I think the government's very clear in its goals. The Clean Power 2030 plan is very clear as to the delivery mechanism. The same with the review of electricity market arrangements. That's all about getting more renewables onto the grid. And the government hasn't changed its level of aspiration, and it's following through as far as we can see in terms of policy. We've mentioned zonal pricing before, and it's really important that they look at how they implement REMA with investor confidence as a thing to look at. I mean, that's completely key because given the government's desired electrical system, you need around £40 billion a year of capex for the next 5 years. We need to build transmission. We need to build assets. The capex is huge. So there's already a question on, can we generate, 250 billion of capital to invest in this market? And the government, I think, is doing a reasonable job of supporting investor confidence. The other key mechanism is the contracts for differences, the long-term fixed price awards to new projects. Allocation round 7, the detail is now out. Strike prices have been published. They're ahead of the last allocation round. We know that the term of those contracts will be 20 years instead of 15. Now, we don't know all of the ingredients, most notably the overall budget, but I think with the bits that have been published so far, I think we can see that the government is serious about delivering on its commitments to increase offshore and onshore wind, and they're making the right moves to support the investment climate.
Looking ahead, what's the investment case for UKW? What are you focused on?
Well, really, I mean, the proposition remains the same. And talking through our results this morning, I'm always pleased to remind people just how much we've paid in dividends over time. So it's our 12th consecutive year of paying an RPI progressive dividend. That's 1.3 billion in total that we've paid to our shareholders. And beyond that, and this is the crucial part, we've generated about £1 billion of cash to reinvest in the business. And that supports our second aim of maintaining NAV in real terms. So the proposition is the same. And whilst power prices forecasts have fallen, illustratively, we still expect to generate over £1 billion of excess cash flow beyond the progressive dividend in the next 5 years. And that will give us cash to allocate appropriately at the time. It's worth reminding our viewers that 50% of our cash flows are explicitly linked to RPI and CPI. They're fixed, and in the next 5 years, that's 60%. And just to say, that has always been a feature of this product, and it's quite valuable in the context of the recent upticks in inflation. So I guess overall, we see that wind remains a really huge market going forward, the potential to grow by maybe 150 billion over the next 5 years. It's a really significant investment opportunity for us, and we expect over the medium term, there'll be really good investment opportunities that can outperform buying back shares. So look, I think overall, the proposition is unchanged. The policy landscape, I think, is now clear, and we look forward to continuing to deliver for UK wind shareholders.
Matt, I hope you'll continue to keep us updated with your progress. Thank you very much for taking the time today.
Thank you, Stephen.
Matt Ridley from Greencoat UK Wind.